The Roger Gibson Talmud Portfolio is a 3-fund portfolio comprised of stocks, REITs, and bonds. Here we'll take a look at its components, performance, and the best ETFs to use in its implementation. The Talmud Portfolio was created by financial advisor Roger Gibson in a 1998 paper titled Asset Allocation and the Rewards of Multiple Asset Class Investing. Gibson drew from the foundational work of Harry Markowitz, the father of modern portfolio theory, to show how a combination of volatile, uncorrelated assets could produce higher returns and, more importantly, higher risk-adjusted returns with less volatility than the average of those assets held in isolation. This, of course, is the same premise upon which many portfolios like the all-weather portfolio are built. Markowitz proposed the idea of the efficient frontier for portfolios, along which we can assess expected returns for any given level of volatility or expected volatility for any given expected return. Gibson's book Asset Allocation: Balancing Financial Risk can be found on Amazon. Gibson's firm is Gibson Capital. The Talmud is a central religious text of Rabbinic Judaism. In it is written, "Let every man divide his money into 3 parts, and invest a third in land, a third in business, and a third let him keep by him in reserve." Gibson noted this in the first edition of his book published in 1989. Translating this prescription into a modern investment portfolio, Gibson defined land as REITs, business as U.S. stocks, and reserve as U.S. bonds. The 1/3 to keep by him in reserve should probably be interpreted as cash, but considering we want investment growth, a 1/3 allocation to cash or a cash equivalent like short-term bonds is probably much too conservative for most investors. Like the couch potato portfolio, there's actually not a strict prescription for the Talmud portfolio for the specific assets to hold. For example, for the 1/3 U.S. stocks position, you could choose to use an S&P 500 index fund, the total U.S. stock market, the Russell 1000, etc. To broadly diversify across U.S. stocks, I'm suggesting the use of a total U.S. stock market fund. The REITs holding is somewhat straightforward, a REITs index fund. As for bonds, the obvious choice is a total bond market fund, but since we know treasury bonds are superior to corporate bonds when held alongside stocks, I'm suggesting intermediate treasury bonds, which should match the average duration of the total U.S. Treasury bond market. Long-term treasuries are likely too volatile and too susceptible to interest rate risk for older investors, and short-term bonds are probably too conservative for young investors at a 1/3 allocation, so intermediate-term bonds offer a happy medium that is suitable for most investors, in my opinion. Thus, my interpretation of the Talmud portfolio asset allocation is as follows: 1/3 total U.S. stock market, 1/3 U.S. REITs, and 1/3 intermediate term treasury bonds. Here's the Talmud portfolio's performance versus an S&P 500 index fund from 1990 through May 2022. As we might expect, the Talmud portfolio has delivered a greater risk-adjusted return, with volatility about 1/3 lower than that of the S&P 500. This is more impressive considering the fact that REITs suffered greatly during the 2008 global financial crisis, having a larger drawdown than the broader market. You should be able to construct the Talmud portfolio with popular ETFs at any major broker. My choice would be M1 Finance because it makes regular rebalancing seamless and easy, has 0 transaction fees, and incorporates dynamic rebalancing for new deposits. I wrote a comprehensive review of the platform that I'll provide a link to in the description. So utilizing entirely low-cost Vanguard funds, we can construct the Talmud portfolio like this: VTI at 34%, VNQ at 33%, and VGIT at 33%. Instead of doing 33.3%, I just rounded the numbers a little bit to make it a bit more simple. I've noted elsewhere why it's probably prudent to diversify internationally in stocks. We can do that by simply replacing VTI with VT, Vanguard's total world stock market fund. Then it becomes 34% VT, 33% VNQ, and 33% VGIT. I'll provide links in the description for both of these portfolio pies for viewers who happen to use M1 Finance. What do you think of the Talmud portfolio? Let me know in the comments. Thanks for watching. Some of the links below are referral links at no additional cost to you. If you choose to make a purchase or sign up for a service, after clicking through those links, I may receive a small commission. This allows me to continue producing high quality content on this channel and pays for the occasional cup of coffee. I have first-hand experience with every product or service I recommend, and I recommend them because I genuinely believe they are useful.